Donald Trump has already called today's falls and what's going on in the market the Kamala Krash.
Wall Street's main indexes plunged on Monday amid a global stock market meltdown. The sell-off in the U.S. pummeled the Magnificent Seven stocks, including Apple, Nvidia, and Amazon, the main drivers of the S&P 500's gains this year, set to lose a combined $650 billion in market value. It follows U.S. economic data last week, including a weaker-than-expected jobs report that stoked recession fears. Bond yields slipped as investors bet the U.S. Federal Reserve would now need to cut interest rates more aggressively than expected to spur economic growth. But Scott Wren, senior global market strategist at Wells Fargo, doesn't believe that's necessary and said the sell-off was mostly an overreaction to a cooling economy that he believes will avoid a recession.
I think we have a combination of a growth scare and a Fed policy scare. So in other words, we went from months and months of when's the Fed going to ease and how much are they going to ease this year and next, to one where growth is plunging and the Fed is behind the curve. So we've had a change in attitude. It's been based on some weakening data. In our opinion, is the economy slowing? Yes. Is there any need for an emergency Fed cut? Doesn't look like it in our opinion.
The market pain eased a bit as the day progressed and stocks pared losses after data showed U.S. services sector activity in July rebounded from a 4-year low amid a rise in orders and employment. But jitters pervaded, particularly among bank stocks and big tech. Online brokerages, including Charles Schwab and Vanguard, reported service disruptions, frustrating investors looking to trade on a day when many sought to dump anything risky. Bitcoin fell more than 15% on Monday amid the frenzied selling, and U.S.-listed shares of crypto-linked companies slumped. Oil also fell on Monday, despite worries that a spreading conflict in the Middle East could further hit crude supplies. Analysts at Goldman Sachs now see a 25% likelihood of a U.S. recession, but J.P. Morgan analysts were more bearish, saying they saw a 50% chance of a recession.
We go look at them go down, what some would call history in the making.
Scary, don't say that.
We have never been down 1,000 points ever, not even intraday on the NASDAQ.
Bidenomics is working. It's working.
The stock market just taking a big old nosedive this morning.
Dow Jones is down about 1,010 points.
That is called Bidenomics.
The Dow fell more than 600 points Friday on a weaker than expected jobs report.
5%, Meta 6%, Amazon 6%, Apple 9% down.
Bidenomics is working.
Fears of a recession began after Friday's disappointing July jobs report.
Bidenomics is working.
A rise like that is historically a sign that a recession is imminent.
This is Bidenomics.
What you're seeing right now in the stock market is what Americans have been feeling for the last 3 years. It's just a manifestation of it right now.
All that is called Bidenomics.
She can't run away from the fact she supported the Biden administration's policies that led to the stimulus at the beginning of the administration. That roared up money, and that arguably put petrol on the flames, if you will, of inflation. She can't run away from that. Now she's going to be saddled by Trump by saying this is her crash. You know, I think the phrase they're using, the Republicans, Trump cash Kamala Krash. It's something that could be dangerous for her, because if Americans are already not feeling very happy about things, they're seeing their 401k pension plans down, they're seeing savings dwindling, they're worried about economic growth, the job losses start to mount, then she gets tagged with it, all her fault. Now you start to see how business, economics, and politics all start to end up in the same messy pit.